bring on board Mr. V. Ramachandran, the Director and Chief Operating Officer at V-Guard Industries as well, to make sense of their Q1 performance. Mr. Ramachandran, thank you so much for speaking with us. It does look like that the company has posted a good set of numbers because on an annualized basis, the revenue is up around 80%. The margins have held on to the level of around 8% thereabouts. But my question to you is that, is this margin sustainable? Are you expecting an improvement from here on, given the fact that commodity prices have come off and price hikes are something which the companies have already undertaken?
Good afternoon, and thank you for having us. As far as the quarter's performance is concerned, the performance has been quite strong. 80%, of course, is coming off a low base last year, as you know, the concerned quarter was also slightly affected due to COVID. But nonetheless, it is a very strong performance, with a 3-year CAGR of over 13%. As far as the bottom line is concerned, I think the 8.1% EBITDA is after reflecting the impact of copper price reduction. Copper price reduction requires to be immediately transmitted to market in categories like wire, and that represents a significant profit erosion, as typically we carry 60 to 90 days of inventory. So the impact of copper reduction on our EBITDA is about 1%. That's I think one aspect. The other aspect is although we have been taking price increases to pass on the input cost increase impact to the market, this transmission is not complete, as starting somewhere around middle of May, commodity prices started to come down. So the tail end of price revision has not happened. But having said that, as the input prices are coming down, it is obviating the need to take further price correction. And as our as newer price commodity is going to start to flow into our business, I think it should restore our margins back to long-term level going forward, maybe a month, maybe 1 to 2 months down the line.
Okay, so margins to come back to the long-term averages over the next 2 to 3 months. But talk to us about how the entire demand momentum has been, because there were pockets that were talking about how inflationary pressures are impacting the demand. But at least this summer, the sales did look like they were pretty strong. Going into the festive season, what kind of a growth rate are you expecting? Because is this growth rate of 80% really sustainable?
No, I think, as I said, right, I think the 80% growth for the quarter, is one-off, as, the quarter of last year has been a difficult quarter because of COVID. So I think 80% per se is not a sustainable growth going forward for the next 3 quarters of this financial year. But I think, we are pretty confident that, we will finish the year well, growing, upwards of 15% growth annually for the year. The other part that I would like to talk about is fundamentally related to how the markets are behaving. And you're right. I think we had strong momentum as we entered the year with due to a very positive summer, and March and April and even early part of May was great. But starting second half of May into June, particularly in summer categories, as the monsoon caught up in some parts of the country, and as the weather eased out in some parts of the country, I think the demand had dropped. I think also, yes, there is a bit of pressure on demand being felt in entry level categories, where what we are basically finding is difficult to pass input cost increases. Yeah? So there are challenges, and there is stress in certain segments of the consumer economy and the consumer market. But by and large, what we are seeing is, the demand is holding, at least in our sector, and we remain positive for demand recovery as we, get into the festive period.
So I just wanted to understand, you're a very unique company when we look at your products, whether you come in consumption, whether you come in industrial, whether you come in capex, it's very difficult to decide. So in terms of really how the capex is picking up, how industrials are picking up, do you expect the next leg of demand to come in from there now?
Okay, couple of things, right? So, firstly, we are a pure consumption play. I think, although the categories that we play in have, multiple sector applications, but predominantly we focus and we play in the consumer part of the market. That's predominantly what I would say. I think, if you are to draw any understanding or linkage from, our network and our, extended business value chain, it would fundamentally be in the consumption space and probably in the building and building material space, construction space. Yeah, because a lot of our products, right, they go into homes, once they are complete. So, I would say, as far as, these two sectors are concerned, I think that certainly is stress on the consumption side, as I was talking about, and particularly at the entry level, there are challenges both in pricing pass through and on demand side. But overall is fine because the mix is premiumization is pretty strong on the consumption side. As far as the real estate sector is concerned, we are seeing pretty decent demand, and demand is holding out. When we look at fans, switches, switch gears, wires, yeah, demand is pretty positive. So that sector is playing all right from what we see. So I would say fundamentally these are two areas that we play. Yes, as far as power sector is concerned, I mean, stabilizers and inverters, the growth is inversely proportional to progress in power infrastructure.
Sure, sure.
So to that extent, yes, you
Right.
can draw some conclusion in that area. I would
Sure.
say
Let
that,
me. Sorry, I wanted to interject there and ask you about a couple of other factors. You talked about how the entire real estate based building material business is doing quite well, but you are also looking at deepening your presence when it comes to the kitchen appliances segment, and you've recently acquired a company as well, Guts Electromech as well. Can you talk to us about what kind of scale up do you expect from the acquisition and what kind of inroads you are expecting to make in the kitchen appliances segment as well?
I think Guts is an acquisition that we have made in the switchgear segment to get, what I would say, manufacturing and supply capability for our switchgear business. Yeah, kitchen is a critical part of our portfolio, and we have, strong plans to build, long-term market position in the kitchen business. The kitchen business is growing positively and has decent scale. We expect to do pretty well going forward in the coming 2 to 3 years, and we hope for this category to be a significant contributor to the overall revenue of the company.
And just before I let you go, quickly, if you can talk to us about the growth prospects of the non-South region, because you have been, of course, having a forte when it comes to South. What about non-South?
Non-South is now a pretty robust business. It accounts for about 42% of our revenues, and we expect this to grow to near 50% in the next 2 to 3 years. We've traditionally been strong in East and to some degree North. Lately, last 2 years, our business is also gaining strong traction in Western region, and in the Western region, business has also significantly expanded to be comparable to our business presence in North and East. West, as you know, is having a good, is having good power supply. So the electronic business is less attractive in the Western market, and to that extent, our Western business was, a bit more challenging to set up because fundamentally our, equity was, emanating from stabilizer. But today, we have very strong and equitable business across the three regions, and
Sure.
these businesses are growing strongly.
Okay, Mr. V. Ramachandran, we'll let you go on that note. Appreciate your time today on the show. But apart